Hello, everybody. I think we've given enough time for participants to come in. We will continue to start admitting as others join. Welcome to our webinar, Making the Business Case for ESG, presented by Bridges for Enterprise and CliMatr. You can just move on to the next slide. Great, thank you. So welcome everyone. Before we get started, I just wanted to go over some ground rules for the next 60 minutes. The webinar is being recorded for Bridges for Enterprise YouTube channel. So if you miss anything from today or want to share it with your networks, you will have the opportunity to do so. During the webinar, please stay on mute if you're not speaking. There will be a Q&A session at the end of the webinar. If you have any questions you would like to ask, you can type your questions in the chat box or unmute yourself during that time. Feel free to share your experience on your social media channels and tag both Bridges for Enterprise and CliMatr. You will find our handles on the screen. After the end of the webinar, you will receive an email asking for your feedback. We would greatly appreciate if you could complete it, please, as it will be invaluable for us for future webinars we would like to host. Next slide, please. Thank you. So now I'd just like to quickly introduce Bridges for Enterprise, the co-sponsor for today's webinar. Bridges for Enterprise is a non-profit that was founded in 2015 and is currently run by our global president, Jordan Walken. At Bridges for Enterprise, we support early-stage social entrepreneurs in the developing world by connecting them to students and professionals who offer free business advisory services designed to make the startup investors ready. This is done through our 6 to 8 month incubation program. Next slide, please. So here is a quick snapshot of our model. Our programs are holistic in nature as we support entrepreneurs through providing free consulting and finance engagements. Each engagement is around 3 to 4 months in length and is designed to support early stage startups move on to the next stage for their growth journey and allow them to create an even greater impact in their communities. We also provide legal and technical advisory engagements upon request. The program is designed for pre-seed and seed stage startups. It is completely free to be a part of, and it's run completely virtually, so it's very global. The program is designed by volunteers and students and professional mentors around the world. It's a great opportunity for startups to get additional support on their journey to scale their business. And just moving on to the next slide. So this is a look at our global footprint since Bridges for Enterprise was founded back in 2015. We now have 5 student-run chapters around the world. Bridges for Enterprise organization is made up of over 300 plus students and professionals. Each chapter consists of around 30 to 50 students, and they are supported by professional mentors. And these mentors come with expertise across industries that can support your business. We have worked with over 100 social startups since 2015 and they span over 5 regions around the world, and more than 70% of our startups in our portfolio come from Africa. For a quick case study, we'll just move on to the next slide. Thank you. So this is Bag Innovation. They are one of the startups we helped support in their business growth, and we supported them a few years ago. They're just one of a number of our success stories, and we helped them through our incubation program with providing a range of services to support them in their journey. And they worked specifically with our New York chapter. So you can read more about them on our website or visit Bag Innovation's website as well. Just moving on to our final slide. So I just want to mention that we have 2 cohorts of startups we accept per year. It's a rolling application process, but we encourage you to register through the following dates: April 1st for our autumn cohort, so that's the earliest one for this year, and October 1st for our spring cohort. If you apply following these dates, you will be eligible for the cohorts. All information can be found on our website at bridgesforenterprise.com. If you have any questions, have a look at our website or send us email with any additional questions. We also work with some fantastic partners who support our program, including our co-sponsor today, CliMatr. Thank you for letting me speak. I would like now to get started with the presentation, but before we do, I'd like to introduce Henry and Benjamin. So a little bit about Henry. He is the founder and general partner for CliMatr. He is a systems practitioner and circular economy expert. He uses ESG sustainability and circular economy design principles, as well as his experience in finance to help startups and organizations innovate and differentiate themselves from the competition. His keen interests span startup fundraising, ESG sustainability, finance, venture capital, startup development, and incubation. And I'd also like to introduce Benjamin. Benjamin is the managing partner at CliMatr. He is a systems practitioner and venture builder. His keen interests involve ESG integration across venture capitals and startups, startup funding, social impact assessments, and CSR, market creating innovations for developing markets, and corporate sustainability, ESG integration for organizations, which include both for-profit and non-profit. So without further ado, I'd like to pass it on now to Henry and Benjamin to introduce CliMatr and speak about ESG.
Awesome. Thank you very much, Melissa, for the introductions. And once again, we welcome our esteemed attendants and guests of this program. Briefly, I'd like to take you through what we do at CliMatr. So CliMatr, we are an ESG consultancy helping corporates and startups build for sustainability. In a world where there's a lot of conversations around what sustainability means, or how it can stand as a value proposition for my business, or how I can maybe help de-risk my business through the lens of sustainability, we at CliMatr, we are taking into strides to help corporates, whether venture capital firms or whatever industry or sector or geography, as well as early stage businesses, right? SMEs, MSMEs, or startups, figure out how they can be environmental stewards, socially responsible, while still making economic sense. And everything is brought under the umbrella or operation of good governance, right? Because we understand that without a proper structure in place, ESG as a principle or as a tenet won't be able to hold a strong footing. So that's what we do at CliMatr consultancy. And we are more than happy to take you through a brief presentation with regards to what ESG means for startups and small businesses, right? Regardless of their location, size, or stage of business. So quickly, I'll hand over this session to Henry to take us through these presentations.
Yeah, thanks, Benjamin, and thank you, Melissa, for the warm intro, right? So once more, I'd like to welcome everyone on today's section. So yeah, just like Benjamin has rightly said, the objective for us on this call, on this event, is to really make the business case for startups, for founders most importantly, so that you can understand why beyond the need for environmental stewardship, what does it mean to me? What other benefit do I get? But more importantly, the focus is how we can make the business case for ESG to allow business owners to be able to, consider ESG strategies and make it a core component of what their corporate strategy is about. Next slide, please. Okay, next slide. So we'll be we'll be looking at the core objectives for us, making the case, like I've said, and exploring a few of our approaches and how we really go about tackling ESG integration at CliMatr. No, previous slide, please. So why ESG? Why is ESG important? Why is it a thing for us to consider? And mind you, we're having this conversation because being in the industry, one of the things, or one of the trends we've seen, especially here in Africa, is that there's quite a huge knowledge gap when it comes to discussion around sustainability or ESG. And for us, one thing we're trying to do, the effort we're trying to push with CliMatr, is to see that we help startups understand that yes, the discussion around sustainability and ESG is really beyond just environmental protection. It also has its own benefit. And exploring this further really is very important, because currently there is a growing buzz and emphasis that is being laid on the need for companies to be able to communicate how they are, actively using their businesses as a force for good to, address climate, the environmental problems we face, the social problems we face, and more importantly, across different stakeholder groups, there's need for business owners to be able to show and communicate how they're able to navigate around the issues as regarding to climate change, how it affects their business. So these are important factors to also consider. And another reason why it's important that startups or business owners start considering ESG is also that stakeholders are really mounting expectations from business owners to really show how they are able to, withstand or remain resilient even in the face of, climate change related catastrophes. And one such example is not directly related, but the COVID-19 pandemic really opened up our eyes to, just a scenario of what it could look like. Let's say we have a flood storm or a flood, we have a drought being a predominant climate-induced problems that you face in a certain region. Now think of the businesses around those areas. This becomes a problem for such businesses. I mean, the viability of such businesses becomes questioned. So the COVID-19 pandemic really opened up our eyes. A lot of sectors became obsolete just within that period and time frame of COVID. And more importantly, it was a test for business owners across sectors and industries to really vet their infrastructures, their system, how strong it is. Would it be able to withstand any pandemic or any issues that comes on board, right? So, but more importantly for startup founders, investors right now are really seeking to understand from the companies that are considering to invest in, how they are also addressing climate-related matters. This is not just from the environmental perspective alone, also from the diversity point of view. They want to know what your mandate is, how you addressing gender inequality, how you addressing decent work, good economic growth, fair pay, and the likes. So stuff like that is becoming a core concern from investors because they are also they're looking out to ensure that any company they're investing in also have a strong objective around these conversations. Next slide, please. So for us, the objective is really to work closely with organizations to help them frame up policies and objectives that really serve as a foundation for ESG management system, basically. And the ultimate goal is also to be able to use that policy to integrate into their business model and operations. Basically, the policy for us, the objective is to create a policy and an objective roadmap that helps startups to be able to find a practical approach towards their business model and also towards their operations. So for us, three core objectives is very important for us in our approach and process. One of them is to be able to manage risks. And this is very true because ESG, from our own point of view, we see ESG as a risk management tool, and we're beginning to see a whole lot of that. We're beginning to see a whole lot of investors see ESG as such as well, because it makes sense. For example, if you try to think of situations, we have a unique situation here in Africa. Some fintech startups, they were able to, they had an approach towards, requesting for loan repayments from their customers. So they issue out loans to customers, and they have this very crude way of requesting for payback from customers. And over time, this has been happening. And just recently, we saw the Nigerian government, put some sanctions across these organizations, shutting them down, locking up their offices, and asking them to revisit their approach towards loan repayment. And this would have been addressed if the startup or the organizations were able to, have strong foundations when it comes to social sustainability. If they had objectives and policies that are able to help shape them, help them work within the confines of what we would call good social responsibility, they would have avoided such kind of disruption to their business, right? So this is one way we can manage risks using ESG. So another core objective for us is also to be able to add operational value at the end of the day. So we want to be able to reduce, where there are leakages or processes that are not optimized, for waste, processes that are not optimized for energy, sustainable energy consumption and the likes. So it's very important. Our approach really helps us to also create, strong foundations around policies that will help add operational value as well. But more importantly for us is about identifying strategic opportunities. Our process also helps us to, help organizations work together with them to identify strategic opportunities that would also help, them create more or less like a blue ocean and basically differentiate themselves from, the competition. Next slide, please. So taking a deep dive, it's a known fact that, so the goal for us is to really lay the business case for ESG integration. And when we're referring to ESG, we're looking at 3 core components from an environmental perspective, to social perspective, and more importantly, a governance structure that ensures that these other 2 arms of ESG is also accounted for. So for us, we've noticed that there's a growing concern around the impact the impact that climate action or climate change really imposes on businesses. So the example I gave with COVID was just one example, right? So, but when we look at other factors, there are other locations. For example, one of the predominant issues we face here in Africa is we face the issue of drought and heat waves. So a lot of industries are already beginning to face backlash as a result. For example, people in the water sector, people that sell fresh water for consumption, would be severely affected by these occurrences. So it's important to start, putting in place long-term, strategies that allows you to ensure that you are protecting your business. More importantly, you are putting in place measures that will allow you to, still have access to these resources, while at the same time ensuring that they have a way of being replenished, even in the face of issues like climate change as well. So as a result, it's critical for us to use an ESG management framework to help mitigate those impacts, which also includes social cultural factors that are also relevant to the business model. So incorporating all these factors into strategy development, business operations and the likes, it can help businesses improve their long-term risks, including their long-term risk adjusted returns as well. So let's take a deeper dive into why it's important that we consider, ESG integration for our businesses. Next slide, please. So the first thing to consider is financial performance. So I know the notion that most founders have around ESG and sustainability is that it's just geared towards environmental sustainability, which is good. Most would agree, but they will ask, how does it affect me financially, which is the core reason why we are in business, right? So there is a research that was conducted by Esg Asset Management, alongside other notable research institutions such as Johns Hopkins University, Oxford University, and the likes. And but this research, Esg Asset Management was able to, assess over 2,000 research materials or research publications. And one of the important findings they discovered was that there was a strong positive correlation between ESG strategies that are, integrated into operations and processes with, financial performance. And they found out also that the strongest positive correlations was also found from businesses that are operating in developing markets. So this says a lot about founders on this call that maybe joining in from Asia, from Latin America, from Africa. There's a huge economic advantage that ESG integration really brings to what you do, right? So this is one of the reasons why ESG integration is also a key component to what we do. Next slide, please. So other factors that helps us make the good business case for ESG is also when it comes to fundraising. So if you are actively fundraising right now as a founder and you're familiar with the fundraising space, you're familiar with venture capital firms and the likes, you will notice a growing trend within the ecosystem that even investors, including DFIs, climate funds, private equity firms, and even impact angel investors, they are increasingly beginning to expect the startups and companies that they're investing in to demonstrate clearly how they are dealing with sustainability, especially within the context of ESG. And this is important for them because, like I said earlier on, for these investors, they see ESG and sustainability as a risk management tool. And that makes sense, actually, given the fact that the impact of climate change is very evident even in our society across different geographies, right? So it makes sense for them to consider, okay, I'm investing in a company located in Africa, and we know that some part of these zones are suffering from flooding. Let's say, for example, as an investor, I'm looking to invest in an African startup that deals with logistics, and one of the markets that the logistic company is serving is affected by flooding. I'll be concerned. I'll be much more interested to know, before I give you any dollar, how would you show me what are your strategy around addressing this issue, which is a threat to your business? Because as an investor, we're looking to invest in businesses that would have the proper gestation period required to give me impressive returns, right? So I don't want to see situations where things like flooding or something that looks like COVID comes in and affects my business, your business model, thereby hampering my own investment. So it's important to show as a founder, even if they're not necessarily impact-focused investors, it's important to show how you as a startup is positioned to address the material risks that really applies to you as a founder. And this is also very important because of this is also very important for startup founders to consider why building their startups. And one impressive thing I think you also get from the program with BfE is this is also a core component of what they seek to address as well. So the next point is on startup exit. So I know most of the startups on this call are probably on the very early stages, but one thing to start thinking of right now, even at your very early stages, is what are the exit scenarios for your investors? What are the different exit strategies you've put in place for investors? And typically in the industry, one of those scenarios involves initial public offerings, IPOs, or maybe raising another round from larger private equity firms or larger funds, basically. And like I've mentioned earlier when I was addressing the issue about fundraising, most of these investment firms and organizations are really, they are making ESG a core component of their business model or their investment strategy, basically. So for you as a startup founder, thinking of exit strategies for even your existing investors, you should be able to show, be what we like to call ESG compliant, to ensure that when you are considering factors such as IPOs, you're also in compliance with the requirements. So this is very important because across different stock exchanges around the world, ESG integration or sustainability leadership, it's also one of the core requirements for any startup or any business looking to list their shares in these stock exchanges. We have such examples we have seen similar cases in Johannesburg, in South Africa, where some startups some organizations, is part of the core requirements of these exchanges for you to have a clear cut out position when it comes to ESG, for you to be able to qualify to list on their exchanges. So think of what that does to you if you have no strategy or you've not even started considering ESG integration into your business model. Think of what that does. This could be a really big major blockage for you when you're seeking to engage with such kind of endeavor, right? So even though it might look like it's an early thing to start considering, but the truth is, if you start right now to prepare the foundations and build a roadmap towards that, it becomes much more easier for you to exit successfully and make good returns for investors as well. So another thing which is also important, another reason why ESG integration is also key is when it comes to regulatory environment. So like the previous example I mentioned regarding the situation we're seeing here in Nigeria with fintech startups and their mode of loan repayment. right? So they would have been able to avoid such instances if they had a strong ESG policy around social sustainability, basically. They would have been able to avoid such kind of issues. And it's even more trickier for the risk is even more higher for tech startups that are still operating in markets that are not yet regulated. So like I said earlier on, ESG is a risk management tool for not just investors, but also for the startups themselves. If you're able to build strong foundations around ESG principles, you would be able to be on the good side of things when it comes to regulations as well. Next slide, please. So other important reasons why ESG integration is also important is when it comes to market access. So for example, tech startups are always positioned, they're always in this unique position to target global markets. And having a strong ESG principles and foundations really help facilitate the most market access. So what does this mean? Let's say you're an African startup right now, or maybe you might find yourself in any part of the world operating as a business, and you're looking to, you're offering a global product, and you're looking to bring that into, let's say, the European market or the US markets. I'm using these markets as an example because they have more matured ESG foundations, basically. The market is more matured there. So it becomes difficult for you to compete with existing businesses across these geographies because already from these markets, these developed markets, customers there are already demanding for sustainable products and services from their service providers. So this having a strong ESG foundation right now, even at the early stages, makes it much more easier for you to seek market access. So I'll give an example of a startup we currently worked integrated ESG for, and this startup happens to be predominantly playing in the Nigerian space, and they were looking at the point to address to also service the American market as well. And it turned out to be that when we did our analysis, we found out that there was high competition for the service they are offering. But one unique thing there was that none of these other competitors were considering ESG integration, or they were in no way building for sustainability. And this is a market that is, when it comes to the global emission categorization across different sectors, this sector is one of the heavy polluting sector. So this having ESG integrated into their business model really gave them that clear differentiation, even though they were meeting a stronger competition, but they were able to, from the onset, speak to the minds and the requirements of the market in general, right? So offering a tool that helps clients really address their carbon emission, it's one advantage they were able to bring into the market. And this kind of opened more market opportunities for them. So other factors, other reasons why we should also consider ESG integration is also on when you're talking about reputational risks, right? So many tech companies, they predominantly rely on their reputation for success, especially when you're still new. And then startups are usually vulnerable to negative reputational consequences. And this is very important because anything can really sink your startup at the very early stages. So it's important you are working within the confines of well-regulated principles that allows you to stay clear of any unforeseen danger that could come your way while building your startups. So given that very significance of early stage, during the early stages of growth, this can really have an impact on the fundraising efforts, customer expansion, even talent acquisition for you as a startup, right? So again, having ESG integrated into your business model and operation really helps you, avoid some reputational risks that would have been otherwise unavoided. So things like labor productivity is also a very important positive factor that ESG integration really brings for you as a startup. So you're able to attract and retain skilled workers. Now, the reason being that the rationale is this: globally, when you look at the global workforce, a large component of that workforce is made up of Gen Zs and millennials. And also, when you look at, when it comes to being actively concerned about the climate, advocating for climate change and the likes, this category of individuals also make up a huge part of that. So what that means is that most times for you to be able to attract quality talents that comes from these age categories, if you're showing them a purpose beyond normal business transactional value, it really plays in a good, it kind of gives you the upper hand when they're also considering similar roles across different sectors, across different companies. So this is also one good, positive thing that ESG integration really brings to startups that are considering this as well. Next slide, please. Okay, so how can we help? How can we help startups, or how are we actively helping startups do this and businesses do this over time? So one of those ways is we're leveraging our expertise, our collective expertise at CliMatr to bring about this service. So our methodology actually acknowledges that ESG factors, they vary across different business sector and industry, and there are unique things to consider why integrating ESG for startups. So as a result, it is critical for us in our approach to really design a framework that is adaptable to your sector and your sector complexities, as well as the overall business objective, right? So our approach really ensures that the process of incorporating sustainability related research, data and insights into strategy developments, client and stakeholder engagement is also streamlined and tailored into the business model. Not just the business model, but also speaks right into the operational part of it as well. So we help you identify the material risks that are associated uniquely to your sector and to your business model. And then we put in place measures that helps you address those risks over time. These are measurable tools you can be able to measure and monitor over time to see how you're doing across the different risk factors when it comes to ESG, right? And then we also, it has a way of speaking downright into your operations as well. So this is very important because it's important for us to also avoid the issue of greenwashing. It's important for us to also to stay clear of the greenwashing issues we are seeing currently in the industry. So this is one of the things our approaches helps us to address as well. Next slide, please. So I'll just briefly walk you through our process. We first start with stakeholder analysis. And this is important for us because you want to know as a business, what does your customer, what does your different stakeholder categories, what do they think about ESG? What are their views? What are their expectations when it comes to environmental sustainability, social sustainability, and then governance as well? So we consider different stakeholder groups, from your customers to your supply chain, to your suppliers, suppliers, even investors as well. We consider different stakeholder groups as applicable to your business and your sector. We're able to understand and gain their insight to understand what they think across the three major pillars of sustainability, which is ESG in this case. And then we use that information as well as we use that information to feed materiality metrics that we create for the startup. So next point is to consider what we call a materiality assessment. So this is relative to your business sector. We try to understand what are the predominant, what are the climate-related material issues when it comes to your business model. What are the, and we try to consider holistically across environmental issues. What are the environmental issues that affect your business, and how are you as a business also affecting the environment? We try to identify key, we do this across the environmental side, do it across the social side of things, and then assess your governance strength as well when it comes to handling these issues. So from these two exercises, we're able to create a materiality matrix that helps us, address, identify what the material issues are for you as a business. And then we use that information to create a policy and, put in place objectives that you can, that you can adhere to help you, address those material issues. Next slide, please. Yeah. So once we are done with, designing a policy and an objective roadmap, the next step for us is to, create monitoring and reporting systems that allows you to be able to effectively measure and monitor and also, report your performance across the identified material issues over time. Right. This is important for you so that you can use that information to communicate with both internal and external stakeholder groups as well. And after that, the next step for us is to create, a performance or impact management system, which, is getting the data, gets its data from, the reporting system that has already been established. The next point for us is really to go about, communications. So this is more like an add-on service we also include in our approach. It's important that as a startup, adhering towards sustainability, adhering to ESG principles, it's important that we craft and we are telling our story better, basically. And this is important for us to also use that to basically win market share, especially in environments or economies where we have the society already asking, demanding for sustainable products and services offering from manufacturers and service providers, basically. So we refine your communication systems from your websites to your pitch decks to your newsletter and the likes, to make sure that we're communicating effectively the progress we've made over time across the identified material issues, and then what the next steps are. This is a very core component in our service offering as well. Next slide, please. So lastly, once we're done conducting these activities, one important thing we try to bring to the mix is to ensure that we help the company and its employees to really come into the mindset of ESG. Because one thing is for a company to have these policies and objectives and roadmap down. This is our net carbon neutral or net positive, roadmap as a company. But another thing is for you to have employees that are tuned to the vision and to the objectives. So one important thing we do at the end of our process is to be able to conduct retraining activities across the different and relevant stakeholder groups, from employees to your board members and to every relevant stakeholder, basically. And we conduct retraining activities as applies to them. This is where we get to show them how they're able to, what their role is in terms of their day-to-day operations, what they have to do to help feed into the metrics that is being monitored and measured by the company in general. Right? Next slide, please. So yeah, that's a little bit about us, and this is our little team. You have myself and Benjamin right here on the call, and we have every other person on this call as every other person you can see on the screen working as associate consultants, basically. So we have that unique team that helps us to really execute on our deliverables as an organization. And I think that's the end of my presentation, hopefully. Oh yes, thank you so much.
Awesome. Thank you so much for sharing that, Ari. Yes, so for every attendance on this call, what you just had is an end-to-end engagement of what ESG could mean for your business, from the why to the value propositions to a step-by-step process about how we at CliMatr tend to engage ESG for your startup and then your business. Whether for profit or non-profit, right? Without further ado, we'd like to move into the next section of this program. And we have on the call Fabio. Fabio is the co-founder of EvoDrop and Ubuntu. Fabio, can you say a quick hello?
Yes. Hi. Thank you, Benjamin. Can you hear me
Good to
well?
have you. Yeah, perfectly. We can hear you
Great.
perfectly. Yeah, good to have you on this call. And briefly, Drop is a company that's, so we all know about the issue we're facing in terms of water shortage and non-clean water. So Drop is really taking into stride to make sure that we have more clean water in our environment. It's a for-profit business, and they are really how to prove that environmental sustainability can and economical sustainability can be infused in one venture. We have two questions for Fabio, and very briefly, we would like to learn, right? How has ESG principles impacted your bottom line? Also, feel free to share more about Drop in case I missed out on some of the context about your business.
Yeah. Thank you for the introduction, Benjamin. Yeah, so as a startup in the water treatment and real estate sector, the ESG principles affected us since the beginning because, yeah, the ESG reporting dominates corporate sustainable strategies today while increasing the investors' interests. Yeah, they're mostly welcome, right? So even also with the sustainable development goals, everything here is based mainly we are in the focus of European market, but also in USA and South Africa, and so all the products must be based on ESG baseline or topics. So otherwise you will have no market. Means even that the competitor products, which are like in a way of obsolete and probat systems, but they have nothing to do with ESG, right? But they are like common systems, so the people are using it without any wisdom or knowledge how it increased the problems of ESG. Mostly the environmental sector and even the social sector, right? Because if you destroy the environment, you have also social crisis. So the approach next to our patents and IPs and innovations we had, we must focus on how we can be better in ESG than all the others. So let's say in a way of how can you measure the total water usage, how can you minimize the water waste, how can you minimize the productions, doing locally production, reusing CO2 emissions, how can you involve as much human or machine works, do not outsource everything. And yeah, so it's an ongoing thing. It's not that you have like a business plan and this stands for the 5 years. So it's you stand for, let's say, a few months, and after you have to recalculate everything, do self-reflection, a reanalysis for the parts and getting deeper and deeper. Our benefit or advantage is that we are self-financed till now. So that's good. As a multi-million business, we are till now self-financed, but it will come the stage where you say we need investors or you need strategic partners. But to all the listeners, try as long as possible to be self-employed and self-owned, because this give you the impact of how is business running, and give you this attitude to stay for what you are. But yeah, if you want in SGS or ESG or sustainable development goals, like investors or venture capitalists, something like that, you at the moment in the 21st century you need to improve in these qualities, otherwise it will get really hard. I mean, in every sector, if it's IT, if it's HR, if it's innovation in water, air qualities, if it's financing, even if it's real estate, right? You have all the banks, you have all the investors, they build their fundings and proper wallet on sustainability. Even if what Henry said before, there is also a lot of greenwashing, right? I mean,
Yeah, absolutely.
sustainability.
Yeah, absolutely. Thank you so much for that. We are quite conscious of time, right? So we're trying to take in as much questions as we can. So two things I learned from what you said is, especially if you're building a venture that has some environmental or social impact, it makes sense to look at it from the lens of ESG to improve the value proposition, to improve the quality of the business. And if you're going to look for investments, you also have to make sure that your business is very well sustainable, right? So that investors can run their due diligence, their research, and make sure that yes, you truly practice what you preach, and you're not just there to greenwash people. Yeah, absolutely. So my next question would be, how do you think ESG and sustainability will impact your industry in the future? Just very briefly.
Yeah, I think if we do not establish our company on the ESG levels, we will fall down, and there will be no future for us. So yeah, it's most important at the moment, and what really is in the future that you need now, like a position which does not really exist. For sure, you have like ESG in universities for real estate or for some markets, but I mean, that's not the ESG you really want, right? It's theory and it's not practical work, and but there is a huge need of people which like you, which establish a new position in employment or using agencies, where you can verify your products on and get like a label. And so I think everything what we see now, it's going to labeling product by ESG levels. And if you will not be inside these labelings, for sure, it's like, how should I say it? It's a little bit like a mafia. The same is what you have with organic food, or I don't know, with fair trade or whatever. It will explode, and it's not, yeah, it will not be independent and controllable, because it will be so huge that it is not possible, right, with human work to control everything. But it will be an effect here in Europe. The first huge banks like UBS, Credit Suisse, they already started with ESG analysis from products, from companies. And yeah, I mean, if the big players started this already, it's a question of a short time period that everyone has to be involved in this.
Absolutely. The major message is that the time is now, right? If we want to secure the future of tomorrow, it makes perfect sense to start to mitigate risk and start to build for sustainability from today, right? So that industries and sectors can survive some of the mega trends we are seeing in terms of climate and social inequities. Correct. So briefly, Fabio also happens to be the co-founder of Ubuntu Movement. Ubuntu is a non-profit organization centered around Africa. Basically, what they do is they try to offer services for free, right, depending on the geography. So from clean water to environmental projects to educational projects across East Africa and Africa in general. So quickly, we have a question for you in this regard. What is the importance of ESG to developing or emerging markets for non-profit organizations? Looks like we lost.
Not him there. So just to answer that briefly. So I think it all feeds into the overall, UN global development objectives, right? So if as a nonprofit you're able to align yourself to any of those 17 goals, you're also helping to advance the cause that we all believe in. And we all know that those goals are designed to help us achieve some significant, environmental sustainability while also achieving significant social sustainability as well.
Okay.
Fabio is back.
Yeah, good to have you back, Fabio. And quickly,
sorry, I don't know what happened with my Wi-Fi.
No problem. We have a last question for you, but Harry can buttress these points more, and then Fabio would finish it off. So, what are some of the difficulties when scaling ESG efforts? So, this question is from one of our participants or registrants for this event, right? So, what are some of the difficulties in scaling or bidding for ESG, right? In taking up these ESG efforts? We'd like to hear from Harry, and then Fabio will give us his insight as to some of the challenges he has faced, right, trying to bid for sustainability.
Okay, so I'll just say briefly that it's much more harder for even smaller organizations. Why? Because there's a huge knowledge gap, especially when you're dealing with founders that are not what I like to call ESG natives, right? So it becomes much more difficult for them to implement whatever a consultant has maybe designed and arranged for them, right? It becomes much more tougher. Then when you're trying to move up the ladder, to much more advanced organizations, one of the difficulties we've seen when it comes to implementing ESG in the business model happens to be backlash or not enough buy-in from the board members. And so most board members, they think it's a distraction from the core business objective. And so that becomes a problem. So these are some of the issues or the challenges that a startup could face while considering ESG integration as well.
Okay, so Fabio, over to you to wrap up. What are some of the challenges you faced trying to build for sustainability?
Yeah, based on ESG level, right?
Yes.
Yeah. So yeah, I mean, in our part, in water security, in water treatment, the problem or the difficulties are that there is at the moment no label. So everyone wants ESG, but there is no verification and certification at the moment. So a lot of projects will not include water as important step, but I mean, it's completely useless because water is life, and without water, a building or a company or whatever can be as sustainable as possible if there is no fundament. It's even then not sustainable, right? And sustainability in a monetary or in a financial way, the same as sustainability in an ecological and in the social way. And so that is the difficulties that we have to find partners or companies, agencies, so big players which accept ESG regulations and labeling especially for water or for a special rubric of market segment. And I mean, the other problem is that if you are a young company, you have to pay. You pay for everything. We pay every year many $100,000 just to get the labels, just to be involved in this party. And yes, so in the association, that's the life.
Awesome. Thank you so much for your insights. Here's the takeaway from what Harry and Fabio said. Some of the challenges are at board level, right? Some of our companies are subject to what our board members say, right? Since they make the decisions. And so if they are not ESG inclined or educated on ESG, it's going to be very difficult to sort of work around ESG, right? Because the top level management don't understand ESG. And so that can be a very major challenge, whether a startup or a business can indeed be for sustainability or not. And then Fabio talked about how lack of standards or lack of labelings, right? Verified credible labelings can serve as a challenge, right? Because any player can come and say we are into sustainability, but then if there's not if there's not a uniform label or standard, then it poses a challenge. And then, of course, Fabio lastly said about seeking partnerships, players in the ecosystem, in your value chain, in your supply chain as a sustainable, right? Because again, you know you're sustainable and you want to keep up on that trajectory, but if there are no other players in your space who are communicating the same thing, who are doing the same thing, then it becomes a challenge, right? For you as a small business, even trying to scale, right, sustainably. Again. And we hope that through this conversation, we are not just opportunities and sustainability, but to also or risk that you can face. And we are more than poised to help you walk through all of these challenges and risks that you may be facing as a business, right? Regardless of your stage, size, or sector. So we are more than happy to continue the discussion offline. We are above time already by 2-3 minutes. So we'll be wrapping up shortly. Thank you so much for your patience and your attendance. And I believe the recording of this session will be provided to all participants, right, within 24 hours. So Melissa, any closing remarks on your end?
It was a great presentation. Thank you to everybody who participated, who spoke, and who joined us. And yes, the recording will be uploaded to our Bridges for Enterprise YouTube channel, and everyone will get access to it. Everyone should also get an email regarding a feedback form for the event, so that would be greatly appreciated. But if there's no other questions, then there is nothing from my end either.
Awesome. Again, thank you guys for coming on. We truly appreciate your time. Cheers. Till next time.
Thank you. Bye-bye.
Thank
All the
you.
best.
Thank you.
Thank you.